Let's continue our conversation. What challenges, or what were some challenges faced by companies operating in 2023 specifically? And how would, of course, you've talked about projections already to affect projections, but how did they affect their bottom line?
Okay, so as I was saying, definitely one of the things we saw was the increase in their costs, right? Power, logistic, transport cost. I looked at Dangote's report, and its transport cost actually increased. And it wasn't we're not talking about a small increase. We're talking about something as significant as 50 billion, right? So those are huge costs, right? And if you also, I was describing MTN, how the unification of the exchange rate. The unification of the exchange rate moved the benchmark exchange rate from about 450 naira to something as high as 1,300. Given the fact that most of these corporates actually take loans, right, and they record these loans are foreign denominated, and they value these loans at the end of a period, you would see a huge significant jump, right, in the value of those loan payables, to the extent whereby it transformed MTN Nigeria's it transformed their profits in the previous year to a loss, right? So these are significant impacts. And from a tax perspective, it simply means that if those loans are due to be settled, it simply means that they probably won't be paying as much taxes as they paid in previous years, right? So these are some of the impacts that occur to most businesses. I think on the other side, you might say that even though government has its own, there were pros and cons. For the government, there were benefits, right? In the sense that removing that subsidy, we've seen an increase in the allocation, right? The FAC allocation to states, right? So that is good for states, but for most businesses, they struggle. So they will be looking for palliatives at times like this.
Well, technology is something that, particularly the tax Pro Max, has been touted by the FRS. Do you think that has helped really improved our collection and, of course, efficiency?
Yes, to a reasonable extent. I will say that it has helped. It has shown promises of efficiency, not just from the side of the tax authorities, but also from the side of the taxpayer, because I do recall that prior to the advent or the introduction of the Tax Pro Max platform, we had instances whereby to file tax returns, one would need to physically walk into a tax office with lots of files, lots of documents, and especially given the fact that, you know, in Nigeria, we do a lot of things at the last minute, right? So it used to be very hectic. But right now with Tax Pro Max, from the comfort of your home, wherever you might be in this world, you can carry out your filing seamlessly, right? Then it also reduces leakages, right? You know, wherever there is an human element, there is always that room for a bit of manipulation. Even though some of these adjustment, let me use the word, could actually go in favor of the taxpayer, especially when they are able to speak to probably the head of tax in an office and explain the reason for their inability to comply, right? So the head of tax could make that judgment call. But this has been reduced to a significant level with the advent of Tax Pro Max. So this actually means that everyone needs to play by the rules. So this has to a reasonable extent increased the remittances that are being collected. So take for instance, if you run foul of the law, right, Tax Pro Max would automatically calculate the penalty and interest, right? It won't wait for that human intervention. It's after discussion that you can now it's after discussion, and discussion needs to be done at high levels, right? Probably going to Abuja. So probably discuss with head of tax or of tax unit, right, before an adjustment can be made. So in this aspect, technology has actually helped, even though there is always room for improvement.
Beautiful stuff. Now, well, let's look at revenue achievements of the federal government. The first 9 months of 2023, as disclosed in the presentation for the 2024 budget. What's your assessment of that?
Well, so I think generally, I think the federal government has actually done quite well. The tax authorities have done quite well, especially, right, in terms of revenue generation. If you look at it from the oil and gas sector, because most of the taxes that are collected, if I stick to taxes, most of the taxes that are collected actually come from petroleum profits, right? Yeah. So in terms of oil and gas, lots of taxes were collected in that aspect. And the federal government has actually quite done a lot also in terms of revenue collection. So I do think given the increase, the improvements, the federal government government has done well in that regard. But I still think there is a lot more that can be done, right? Because there is a lot of significant potential, right? And I know that it's part of what the Fiscal Policy Committee and Tax Reform Committee are coming up with. See how the federal government can increase its non-oil taxes without necessarily increasing the tax rate or increasing the tax burden on existing taxpayers, but rather by expanding the tax net, right? And ensuring that those who are not complying are actually encouraged to comply, because there is also the issue of trust, right? A lot of people they kind of, there's that huge trust deficit. People are not certain or are not sure that the authorities, the government, would make judicious use of taxes contributed. So I think the federal government needs to do a lot more in terms of bridging that trust gap, and they will be able to see more collections in future.
Interesting stuff. Let's look at insight into Nigeria's total incentives to companies, because there's been discussions around this that should we continue to do this, as stated by Mr. Tawedele at this committee. What do you make of that?
Yeah, there's been a lot of talks about, and I know the National Assembly has also invited most of the agencies to come and speak to this issue. Well, yes, sometimes incentives are good, right? But it then depends on how they are being channeled or where they are being channeled to. If they are being channeled to areas whereby it impacts on the common man, right, then it does make a lot of sense, especially when supply of those essential commodities are not sufficient enough. It does make a lot of sense. But however, if they are being channeled into corporates who probably don't need them, then Nigeria is actually going to be losing, right? So these are some of the concerns that we've been having. And the federal government, through the Finance Act, has actually tried to tackle some of these challenges by taking out some incentives that are redundant or some incentives that are not making business sense, right? Some incentives that were kind of archaic, right? So the federal government has actually taken that out through the Finance Act. Investment allowance that would normally be applicable for any investment that is being made on plants and equipment, that has been taken out totally. And also investment allowance for investments being made in rural infrastructure in the rural areas. That has also been taken out, even though I think that could be tweaked in such a way that it's going to be beneficial to both the government as well as residents in those rural areas. So I think there needs to be a lot more needs to go into a lot more stakeholder engagement needs to go into this area.
Interesting stuff. Let's wrap up with the sectors that have contributed most to tax revenue in 2023, looking at that report. Okay,
so as like I said, because most of the profits were coming from 2022, your guess would be as good as mine. The sectors that contributed the most were manufacturing sectors, right? Manufacturing, especially when you look at the likes of those who are engaged in fast-moving consumer goods, right? Or those who are producing essential commodities, like the cement industry, right? You see a lot of profit because those are essentials, right? And you've seen the price of cement going up, right? So the manufacturing sector did quite well. The ICT sector also did quite well. Then also the financial service sector. And you can easily understand this. You can also tie this to the improvement in terms of GDP contribution, right? These sectors have actually grown, so therefore we would also see growth in terms of their remittances. But in subsequent years, in this 2024, like I said, given the impact of the exchange losses, right, to some of these businesses, I don't think the ICT sector might do quite well, right? But probably the financial service sector will do quite well in terms of interest income.
It's expected. I must thank you so much for your time. Mr. Abiodun Kayode is a senior manager and economist with PricewaterhouseCoopers. Interesting having you in the studio. We appreciate your time.
Thank you for having me.
All right then.